The CFPB, I don't know if you heard this, was just blasted, as they say, by House Republicans at the House Financial Services Committee hearing just a couple of days ago. Now, you be the judge. Were they blasted? Think about your marketing vendors, and the company that you work for with these little pieces of insight from Rohit Chopra, the director of the CFPB. Now, it takes too long to explain the whole thing to you, so I'm going to play it at 150% time the normal speed, so listen up.
Director Chopra, in your new abusive acts and practices policy statement, do you include the following as fitting into what will now be considered abusive and a violation of consumer financial law? And I'll ask that you answer yes or no. A pop-up or drop-down box?
I don't believe that by its own is any violation.
Multiple click-throughs?
I don't believe that by its own is any violation. I think that was used as a series of examples to look at material interference.
What about consumer confusion?
Standard. Well, that is part of the statutory.
What if it's unreasonable consumer confusion?
Unreasonable on the part of the consumer?
On the part of the
That would
consumer.
not be the issue. That would not meet the statutory standard. The standard has two prongs with some sub-prongs. One is material interference with the consumer's ability to navigate, and the second is taking unreasonable advantage.
What about customer support taking too long? Is that abusive?
Yes, that's right. It turns out that the CFPB and the House Financial Services Committee have absolutely nothing better to do than discuss consumer finance protection in terms of the number of pop-ups and pull-downs that you're going to see when you're using your marketing pieces, and perhaps this is going to confuse your clients. Never mind, they might just be too dumb to figure this stuff out.
To start, press any key. Where's the any key? I see ESC, Catarl, and Pigup. There doesn't seem to be any key.
I'm telling you, this is crazy, isn't it? If this is the new bar, then lenders, you're screwed. My God, you have how do you even navigate a site without pop-ups and pull-downs?
The blue ones are ads. That's the toolbar. Now you've opened Word. Close it. Close it. Don't save it. Stop clicking. Don't go there. Why are you buying a freezer?
Because from what I just heard the director say, this is a reasonable course of action, and that's what they're going to do. Now, moving on, and let's brush the levity aside because this one is interesting and you need to have your ears perked up. It should be frightening for most of you because what I'm hearing the director say, the CFPB is going to take a deep, long, hard, critical look at you and your chosen path on how to originate a loan.
We've shifted the focus of our enforcement program away from targeting small actors and putting more attention on large and repeat offenders. We're focusing more heavily on supervision of non-bank financial firms, which have not always been subjected to similar oversight as local banks and credit unions. We're activating unused authorities to minimize regulatory arbitrage by non-bank firms seeking to gain a competitive advantage.
Yeah, they're going to go after non-banks. Fact, as of last year, and growing, non-banks originate over 71% of agency-backed loans and 86% of government-backed loans per Inside Mortgage Finance. And that number, again, is growing exponentially. That's because banks, the depositories, have thrown in the towel due to the very enforcement that non-banks, you, are about to face. Here's the thing. Who are they going to hit? This one's easy. The biggest non-banks in the industry. How come? Well, it was once explained to me that the CFPB isn't gonna get out of bed for under $10 million in enforcement, and truth be told, that figure is really much higher than that. Right, Wells Fargo? So now, for the latter part of 2023 and certainly 2024, we're going to see the agency looking at non-banks, big players, and many of the modified hybrid mortgage models that seem to be high on pay, low on rate, and perceived to be lax on consumer protection and regulatory interpretation. That's who they're going to go after, and I think we can all make a short list of who that's going to be. So listen, boys and girls, pop that corn, because this regulatory movie is about to begin. Never has a loan officer had so many opportunities on places where they could hang their license to go ahead and write loans as we have today. The bank, the non-bank, the broker, the boutique, who seems to be going the way of the dodo bird, and so many more options. Listen, I want to hear back from you. Let me know what you think is going on in the industry and what you're looking for as a loan officer. It totally helps us out. Please reach out to us. I'd like to have a conversation with you. Fill out the information down below.